We're going to dive a little bit deeper into a couple of the topics. Arthur wasn't kidding when he said there are probably 24 questions that came through the mobile box, which I'll try to get to. But a couple things. So the WMEP survey comes out, and 50% of the survey respondents said recession, downturn. How do you reconcile that, given what we heard earlier today, right? Things are generally good. We've figured out a way to get through supply chain and labor and geopolitical risks. How do you reconcile that? 50% of the respondents in the WMEP survey said recession or downturn. Anybody?
I think we all feel a lot of uncertainty. 50%, that's half, right? If I know my math. That just says to me, it reinforces how much uncertainty there is. And that's what makes this business environment, at least for me, so incredibly hard. I've been in leadership positions in business for close to 30 years, and I'll say the last year has been the most difficult because there is so much uncertainty in all these factors in our economy. I mean, the fear of recession combined with low unemployment. Who would have ever guessed those two things would go hand in hand, right? And so, to some degree, it depends on your industry and the nature of your business and your capital environment. I mean, how much risk are you going to take in a very uncertain environment? I got to be honest, the dice we rolled, 2.5 years ago in this environment, I would not roll those dice with this level of uncertainty. As I said in the conference, we're kind of all in, but it really goes back to kind of managing risks through uncertainty, and every business has its own unique environment that you got to kind of work through. So I don't know if there's one answer, Dave. It's just you got to take those factors into consideration.
Yeah.
So we're not really seeing it ourselves yet, though we are watching our quote activity. Our bookings are record, besides the whole Amazon disappearance. But the other part of our business is records right now. So our backlog is strong, but we are watching quote activity. We watch that like a hawk, and that is starting to slow down a little bit. So we're watching to see what happens, and then we'll have to adjust as we go. My viewpoint on a recession is that 50% of the people are saying it to be a recession because no one wants to be the last one. You don't want to be the last one to jump in, right? So, and that sucks because then it beats the recession actually happening. But
Self-fulfilling problem.
Self-fulfilling sometimes.
I guess I'm sorry I don't have the crystal ball to say whether one's right or not. Similar to what Pat had said, we're looking at our key process indicators. Architecture billings are still up. Our orders are still coming in. We're seeing a lot of strong tailwinds in the market, but the last time we saw interest rates this high and double-digit inflation, it was 30, 40 years ago, and the outcome wasn't good. So I think we all have to be judicious about what the next potential step would be, and just move cautiously.
So David, the question is on how do we understand just the total ambivalence in the economy about whether there's a recession or not?
Yeah, and reconcile that against current performance, backlogs, as you look at balance sheets, liquidity, et cetera. It feels to me that, as we talk to our manufacturing base in Wisconsin and really across the Midwest, people are feeling pretty good, generally speaking, right? We figured out a way to get through supply chain. We figured out a way to get through labor. We had labor issues in 2019 before COVID, right? And we're still at what? Unemployment's 3-ish%. That's pretty good. There was a day that we'd all be really excited about that, right? So given the survey, the WMEP survey said roughly half, 1 and 2, either thinks we're going into a recession or a downturn. How do you reconcile the survey respondents with how you're feeling about business?
Yeah, I think the discussions about recession often get tripped up in economic questions about what is a recession, how many quarters of growth. I think a better way to ask people is the overall economy a tailwind or a headwind to you right now? And I think most of us in the room say, yeah, it's still kind of a tailwind. And then, so how do you reconcile the fact that some are feeling the tail, some are feeling the head? I think it's just that we don't feel it yet. Like that's my, skeptical point of view, because we make things that are distant from end markets. I'm on the board of a company that makes consumer cookware, and they saw the turn down hard and fast in February, and it's continued. And so I think about that company, and I think about our company that hasn't felt it yet, and I think it's impossible that the two can coexist. So we just haven't felt it yet. It's going to slow down. And then, Pat mentioned interest rates. That's exactly the reason why interest rates are going up, is because the economy is going to get slowed down. So the Fed is going to slow down. That's the whole objective, and that's how you bring down inflation, is to take demand out of the economy. And so I just feel like we're all going to feel it at some point. We just haven't felt it yet.
JP?
Not much for me to add, I guess, based on what the group said here, but predicting the future, tough. I think backlogs, I think our backlog is 4 times bigger than we've been over the last 5 years, so I would say it feels good right now, but who knows what's to come, just keep getting the opportunities in front of us.
Got it. All right. That's interesting. So, given what all of you said, we talked about some headwinds, some tailwinds. What are the headwinds that you're all facing as you go into 2023, 2024? And how are you going to attempt to, say, prioritize those versus the tailwinds? Sachin, you talked about a little bit. How do you prioritize that? Each of you has your own strategic plan, right? You're probably not going to pivot too far off that strategic plan. But what are the headwinds that you think will be your biggest priority in 2023? Who wants to start?
Sure.
Tom pointed to Pat.
Yeah, well, I'll go first this time. I'm feeling pretty good because I think we faced almost all of our headwinds this year. So, our right sizing occurred this year. Our exodus of a major customer happened this year, and the rest of the business seems strong, and we are fully staffed, and we kept our best people, and we've got more space, and it's cost effective. So I'm feeling pretty good. Besides, if there's a major downturn, that'll obviously affect us. So I guess I'm feeling I don't feel fortunate for what I just went through, but I'm feeling fortunate that we've managed through it, and so now we're looking to just have some nice, steady, sustained growth in the next several years, if God willing.
I think one of the key things is, kind of our headwind was maybe your tailwind, and that everyone kind of fared through the last 3 years in a very, very, very different manner, and to some level of normalcy start to occur. So I still think our key things from our company is going to be, most of our sales for 23 are already locked in, so we know we need to hire, we need to move forward. So it's recruiting and bringing more people on board. That would be our key focus.
I think one of our biggest headwinds over the past 2 years, as we've all talked, has been the lack of labor and the cost of labor. I think that's going to convert into actually a tailwind for us. You've already started to see it where labor market is softening. We're able to get the types of people we want, and the cost is not escalating as much as it used to. So that could actually help margins for us. The thing that I worry about is just a general decline in demand, which seems that's the biggest thing that can happen to any business. And our strategy is to concentrate around markets where we think will fare better than the average market. So we acquired a foundry, for instance, in Minnesota, where our foundry in Wisconsin plus this foundry, we were both the top suppliers to this company that makes defense equipment. And this was before Ukraine happened, but everything that's happening in the world feels like defense is going to be a good market. Medical equipment seems to be another one that's weathering the storm better. So we've tried to increase our concentration on a few markets that feel a little better, that's going to be our strategy.
For LMI, it's going to be supply chain, for sure supply chain. So for 2023, in the past, we've given forecasts to our suppliers. For 2023, they've not only asked for forecasts, but they've asked for legal signed commitments, which is very different than what we've experienced. And oh, by the way, we're going to raise your price 30% on January 1st. And so I'd say we got some work to do to diversify our supply chain. We've got a nice group of suppliers, but we've got some product lines that are really single sourced, and we don't have a lot of options. And so as frustrating as that is, there's not a lot of options for us right now. And so we got to really strengthen our bench strength on suppliers. I think it was mentioned a little earlier, around diversifying suppliers. That's key for us.
Got it. Tom, anything? Move on.
No, go ahead.
Right. So, since you talked about supply chain, perfect opportunity to talk about how you plan on doing that. But Tom, you talked about kind of dual sourcing and maybe even triple sourcing where you can. How difficult has that been in, call it 2022? And you know, if you think about, you know, some of the problems that we've had in China with COVID shutdowns. I just read the paper this morning, and they're dealing with it again, where, you know, they're going to shut down entire plants again. How do you deal with that? What advice do you give to other folks about, you know, dual and tri sourcing?
You know, you tend to learn your best lessons through the mistakes you made. I have to be honest, early on when I joined Glenroy, I wasn't really that involved in our supplier relationships. I'm actually very involved in our supplier relationships right now. In fact, I'm going to be going over to India here shortly to meet with a new supplier, right? And we actually relied on brokers quite a bit for a lot of our international material. We didn't even have direct relationships with our suppliers, let alone top-to-top relationships with our suppliers. So, you know, if anything, it's taught me the hard lesson that your supplier relationships, in a lot of ways, are just as important as your customer relationships. Because you're not going to have a relationship with your customer if you can't supply them. So, you know, if you, as a leader in your company, don't have those direct relationships with your suppliers, there's a gap in your responsibility. And I had to learn that the hard way, and I'm still learning that. And in fact, I'm getting on a plane in the morning to go visit a supplier down in the Southeast. So I'm spending a lot more time of my time making sure we have these relationships with our suppliers. It is difficult. I mean, we're all really busy. This is just one more thing that's being added to the things that I'm trying to be engaged in. But I think we've learned that hard lesson, certainly I have, that your suppliers are going to make or break you. And I said it in the meeting, but just to reiterate it, your procurement people will take the path of least resistance. I would, if I was in their shoes. What's the path of least resistance? Buy everything from the cheapest supplier. We're not the low-cost provider, okay? We're not. We're a value-added producer. Maybe if you're a low-cost provider, then that's the only thing that matters. But if you're a value creation company, then you have to be thinking a little bit broader than that. And so, once again, I've learned that lesson the hard way.
Anybody else? Sachin?
Yeah, so I mean, I find Tom's comments super refreshing because, you know, so we don't have much on the supply side. We buy aluminum and sand, but we obviously have a lot of, we sell to businesses. And for as much talk as there has been about, you know, valuing suppliers, we don't actually see the love as much, you know, I mean, it's like my dad at Thanksgiving, he's not used to hugging people. It's just a very awkward, you know, embrace. They like, they try to show us some love to buy like Jimmy John's sandwiches, but we know they're taking their customers out to like Packers games, you know, we don't see that. So I think there's an opportunity though, and I think that's a mindset shift, just as we've all learned to sell ourselves to potential employees like we'd never done before. It used to be, you all want to work at our company, well, I'm going to pick and choose who works here. And now it's like, to everybody, we're selling ourselves, and then you see companies be successful at that. So I don't see the type of supplier development yet, because it takes what you're saying, which is avoiding the path of least resistance, you know, deliberately diversifying, having different price points, having, you know, mitigation strategy around, you know, I have an import supplier who's my main supplier, now I need a domestic, and what that feels like is, you know, you might be paying double, 50% more than what you pay elsewhere. And we see that every day because we're not a low-cost supplier, but companies come to us and say, hey, we're all about reshoring and we're going to do it. But then, they can't swallow that pill of, oh, I have to retool and my piece price at this company is going to cost more. It's not really, I mean, it is in some respect a knock on us in that we're not competitive, but we're never going to be, as low cost as a foundry in Indonesia or India or China. It just mechanically does not work, and so we need people making a deliberately different choice. And ultimately, I think our customers will be more healthy for it.
Thank you. So supply chain, is it getting better? I mean, from a raw materials standpoint, from a sourcing standpoint, from a shipping standpoint, whether it's coming across the pond or just being shipped here domestically, is there scarcity of raw material or are the supply chains starting to get a little bit better?
It's getting better.
Yeah?
More predictable.
More predictable?
Yeah.
Okay. Sachin?
Yeah, much better. I think the data shows the flow of containers into the ports of Los Angeles, Venice Beach are 1,000 times better than they were a year ago. So yeah.
I think this notion that prices were going to recover has faded.
Yeah.
It was this transitory effect, and maybe we've seen in some metal commodities that they've come down, but they're still not anywhere where they were before. And then we talked about the labor inflation before, and that's where I've kind of settled in. Is look, people aren't going to give up their raises, so the prices aren't coming down. A lot of them aren't coming down.
Got it. If you anything to add there?
I just had a call right before this, and it wasn't a good one around supply chain delay, so just recency bias, no. In the moment, not good.
Can everybody hear in the back when we're not using the mic?
No.
All right. Sorry.
What I said was I just had a call before the event today, and we're shorting a customer. Again, a supplier is shorting us, so my perspective on it is a little bit hot in the moment, and so I would say no. For some reason, it seems like our competitors struggled earlier in the year, and we did not. Now, late in the year, we're seeing a little bit more slowdown from our suppliers, so it is more predictable, but they're getting predictably bad with the way they're delivering. And so it's a little scary for us right now.
Got it.
To be honest, yeah.
Got it. So, thanks. One of the questions that came from the audience, and so everybody now has opined on supply chain. One of the questions that came out was, with everybody so focused on supply chain, what are we doing about sales and marketing in 2023? Are we going hard after new revenue, or are we concerned about supply chain so much where we're just trying to stay here and accommodate last year's demand? Anybody want to attack that? Yeah.
So this is the area I love, the sales part of the business. I love it. There are so many people right now being treated poorly, so many customers being treated poorly, that this is what I'll tell our sales folks. I'm not sure they all buy into it yet, but we really get to create our own story right now. So in the past, our lead times were 3 to 4 weeks. And if we tried to sell a 5-week lead time, it was not accepted. No way. You can't do 5-week lead time. That's crazy. Now we're selling 12 to 16 weeks, and the customers are like, we just need lids, right? Get us lids, however you got to do it. And so the environment right now is we get to create the story. If you're having a hard, if customers are struggling with their suppliers, we really get to create the story around how we're going to treat them fairly and treat them good, and then build the lead times in as we go. Like sell it, however you want to sell it, right? And if they don't bite, they don't bite. We've got a backlog that's crazy, but people just want to be treated fairly and communicated with right now. It's the way that we're seeing it. Yeah.
Yeah. Good. Anybody else?
I'll add one thing. You know what I'm finding? In fact, I was in a meeting with my executive team this morning. Given this environment, the sales process actually is much more cross-functional now, because you got to make sure you're going to have the materials, right, and you have the staffing, and you're going to be able to manage the supply chain, right? So we had a big customer opportunity come through, and usually the sales guys would work through pricing and then close the deal, right? In this case, we had to meet 3 times as an executive team because we had to understand, are we going to have the materials? Are we going to have the staffing? Do we have the capacity? So the sales process, I think back to my Johnsonville days, I was in sales. My job was to sell. And I did, and I loved it, and I love selling. But now it actually has to be much more collaborative because of the environment that we're in. Because once again, if sales gets ahead of everything else, then in the end, you're just gonna shoot yourself in the foot.
Yeah, I would say, so just to add on to our situation is that we lost the big customers, so sales is full on. And, so there's no real hesitation on that part. We have the capacity for it, and it's going well. And I think, oh wait, I'm sorry, I wrote myself a note, and now I can't read it without my reading glasses on. That's how short my memory is. The thing that we've had to deal with, similar to Tom has mentioned about the lead times and the kind of the collaboration between the sales department and all the other rest of the company, that really didn't happen before because Flow had lead times. It was always 8 to 10 weeks, like for 30 years, 8 to 10 weeks. And it took a lot to get the guys who scheduled it and the sales guys to realize you can't just blindly quote 8 to 10 weeks because that's what we were still doing. And then we couldn't get it out in 16 weeks and then they're upset because the company couldn't ship it on time. Like, well, did you check any reality on that quote? So I agree, a lot of collaboration has really helped in our sales efforts.
Thank you. Before I shift topics from supply chain, any questions from the audience on supply chain for these guys? Yeah.
With everything shifting and moving, how long are you able to quote out your prices for with all the inputs kind of changing at a rapid pace?
How long we hold the price, you mean?
Right.
Like what, we've dialed it down to 60 days. Some of our colleagues, I've talked to other companies and peer companies that do 30 days. One company in the contracting business, construction business, had 3-day expirations on their quotes at one point. And they're like, look, sign it now or you're not getting this price. It's pretty much the bottom line. But that was a few months ago. I think they're off of that now. But 60 days seems to be okay for us.
Actually, it's hilarious. We were 90, we came down to 60.
Yeah,
We
that's
re-quote everything every 60 days.
Oops, sorry, they can't hear that good.
So that was a really tough lesson for us as we worked through the recession. So the business we work in, we usually quote projects 12, 18 months in advance. Put in a proposal, then sign a contract that has some language that says you're not going to come back to us for another dime, no matter what the reason, including the pandemic. So there was a lot of projects with, the financials just didn't end where we want to be. We managed the best we can. We're trying to mitigate that going forward. It's still tough because you're competing against a lot of other companies and there's a similar dynamic out there. So, but we've gotten a little more creative in, requiring, okay, we're going to get one ability to true up a cost right before we sign the contract, things of that nature. But Pat's comments, so we're taking on this big leap of faith on the side of it, but a lot of our suppliers on the metal side, we're literally giving us quotes good for 24 hours. They won't even give us 2 days.
Can I actually have a question? Is your name tag say financial?
Yeah, commercial anchor.
Commercial. So from a financial standpoint, I wonder, so you guys have talked about steel. There is a kind of a nascent steel futures market. Have you used that? Do you plan to hedge steel? And if not, why not?
I'm not smart enough to hedge.
That's a terribly mean question, because we don't know how to do it. That's why we have done it. I know, that's a good question, and we are not that sophisticated. But good question.
I spent a lot of my career in the meat industry. Hedging is brutal. I mean, you might win, you might lose. That's not the business I'm in. I'm in the flexible packaging business. I don't want to be a financial market analysis, right? So I think you got to be careful to do what you do well. That's its own skill. That's its own capability. If you have it, Sachin, get it, go for it. But I don't, and I don't have anyone in my company with those skills, and I don't want to take on that risk in addition to all the other risks I'm dealing with.
But I do have actually something that might be a pertinent example. We have a product line that has really long lead times, like your projects. Only 12 months would be a norm to get a cart conveyor order and ship them. And in that 12 months, that price is locked in and cost did nothing but increase over that 12-month period. So the margin shrunk to being really pathetically low. And we had options. We had a 90-day expiration on quotes, which the sales guy, or moved to 60, but the sales guys never would want to quote because they thought they might lose the sale. And we forced them to get over that paranoia, and they were all over it. Now they know that if it's expired, the customer's getting a new quote. It's become a routine, whereas before it was ignored blatantly in the company. No one ever really raised the price on follow-on quotes. So we started that. We also implemented in our terms, it said if this product or this project does not ship within 180 days of the PO receipt from you because of approval delays, because they have to approve the designs, we reserve the right to revisit our cost at the time and adjust pricing. And we never used that clause before, and we have used it. And we've raised the one job $70,000, and the customer agreed to do it on a $200,000 job. So it worked because at that point they had no choice, and we had the right to do that within our clauses. So I'd say take advantage of that. And then the other thing was, when you go past these quotes and they get old, then you have the option of saying, okay, you gotta go back to the customer and ask more money, and nobody wants to do that. So with one of our larger product lines, we work what we call the 12-month quote price. It's an internal term, but we look at 8.5% increase on materials, 3.5% increase on labor. What's your price today? Run those increases for 12 months. What would your price have to be in 12 months to keep your same margin? And that's the price that we'll call the 12-month price that we can feel really good about for 12 months. And we just tell the customer that's your price. And then if it ships in 6 months, we make out great. If it ships in a year, we'll still be okay. That was another thing we implemented.
Anybody else want to answer that? No? Otherwise, I can shift.
Well, I don't want to take us down the rabbit hole of hedging, because that was the point, but, I asked the question because, I think about what can you not predict about your cost that doesn't enable you to hold your quote for very long. And I often hear, steel. And on the aluminum side, there's actually a very robust and well-established futures market, and everyone hedges, so it's different than steel. But other than steel, the only thing that is volatile for us in our pricing structure is that some other customer comes and is willing to pay more. And then we're like, oh, actually your price just went up. That's why I can't hold it, because somebody else wants to pay more. But, it might be interesting to think systematically about what in our business model can we not predict, and then how do you actually give stability to that cost, or, over the long term, and then you can go to market and offer a stable solution that maybe your other competitors can't.
Thank you. So there was another question from the audience, and it reads like this. What investment in automation are you making? For example, robots, ERP, software technology. Sachin, you talked a little bit earlier about, sometimes visibility into the future makes it a little hard because, it might be a little cloudy, and how do you measure an ROI against an uncertain forecast? So what investments might you all be making in technology, robotics, et cetera?
Probably not the greatest answer, but we haven't done much. We've looked at, three of our new machines have an opportunity to have like a robotic arm that pick and places lids. So we've looked at it. We haven't really made any decisions on it. The piece that is tricky is it still takes an operator to run the arm, but you get one operator per 2 machines versus 2 operators for 2 machines. The other side of it is the robot has its quirks. And so we haven't really seen that it's been proven yet to be efficient and run 24/7 without breaks. But we've looked at it, but it's really where we're at, not much else there.
Okay.
We're investing a lot in robotic assistance that is better for ergonomics. So it kind of goes back to that labor market tightness again. Because if we didn't make these sorts of, for instance, we buy a thing called a Danneker arm. I'm sure a lot of you use this piece of equipment. It helps people lift heavy things. And 5 years ago, we would have just had people lift them. But now we need to do that because we're getting different types of workers and people who don't want to be lifting 75 pounds, 50 times a day. So those sorts of investments seem to be paying off just from safety and recruiting perspective. Where we're struggling is on automating in kind of labor the traditional way, because the capital cost of that automation is now so high, and it's actually sometimes better to just have a human do it. And so that I'd be curious to hear your thoughts on, as everybody's automating and there's just so few robots to go around and all these companies are, charging more, how do you justify that? It's more difficult now.
We don't have a lot of,
We're not real applicable in this because we have, most jobs are all custom. They're all uniquely designed. We don't make thousands of anything. We make onesie, twosies. So every time we look at robotics and try and do that in our welding operations, it comes down to, every consultant we brought in is like, yeah, it's probably not going to pay back very well at all. So we'd love to automate. I'd love to remove human positions if I could, not because I don't like people, it's just because it's hard to find them, and then sometimes they don't come to work every day. So it would be really nice actually to automate more. We did invest $300,000 in a used laser cutting center that helped us bring stuff in-house that we used to buy from the outside, so that's a cost savings for us, but that's about it at this point.
Yep, okay. So, cybersecurity. Fun topic, right?
Almost as
Cybersecurity.
fun as remote work.
Well, so, I mean, and not just, as it pertains to information technology, but the operational technology, right? Because there's so many more things that are automated, whether it's robotics or maybe direct links to, vendors, et cetera. Are you spending a lot more time on, where the bad guys are coming from? Are you thinking about that as part of your strategic plans?
We actually got really lucky. We started working with a third-party vendor about 2 years ago, and with their assistance, we started moving our systems into the cloud. Don't ask me what that means, please. But my IT guys can tell you. But anyway, we did get hacked, and we did go through ransomware, and we said, keep it, because we had it backed up. And so we didn't pay the ransomware, and they wanted hundreds of thousands of dollars, which for a company of our size would have been a big problem. And if we wouldn't have started that conversion 2 years ago, we would have had to pay it. So, once again, I don't know, it depends on the size of your company and the resources you have, but I think you gotta rely on outside experts on this, and when I say rely, I mean rely. And you gotta do it. I mean, if you haven't suffered it yet, you will. And we were just lucky. I mean, I think we were 3 months. 3 months later in our implementation, I would have been paying hundreds of thousands of dollars, if not more.
I'll second that. Doing regular backups is critical. We had an incident before I got to Flow 4 years ago that where we were ransomed and there was backups done that same day and just said no. So that was fantastic. Other than that, my only wisdom I can offer is we do whatever our insurance company tells us we have to do in order to get our cybersecurity insurance renewed.
so we seem to have a reoccurring theme here. We got hacked, held hostage, moved everything to the cloud. Double down on cyber training, and we do cyber training probably just as much as any other HR training. And that's really the downfall. It's just, and it's scary. I mean, it's one click, one employee, one click, and someone takes over your system. The more you move to the cloud, the less access they have. But it looks like Pat's got some.
There's something cool. The one click scares the poop out of me, right? Because I've almost clicked on the wrong things, right? And all it takes is one employee. But this MFA thing, if I have this right, MFA for us last year was our big step that the insurance company told us we had to do in order to get our cybersecurity or they weren't going to renew us. So we did, and it was painful, but it was really painful for the administrator MFA. And so at first we pushed back until it was explained that by giving your administrators multi-factor authentication, then someone clicks on the wrong thing and they get access in your system, they want to monkey business your system, they have to have the right phone that sends the 5 to 6-digit code to it. So actually, the administrators get an implement for administrators helps prevent the phishing clicks from ruining you.
We moved to the MFA as well. But, Sachin.
Just like real quick, our IT group does a test on a monthly basis where they'll send out a fake, and then we'll send out a report and try to have a little bit of fun with it. I know it's scary, but essentially, if you click on it, it lights up, and so it's not to scare the employees, but to just really, that's the training piece I think you talk on. Yeah.
Okay, shifting a little to labor, we're not gonna deal with hybrid and
the younger folks that I loved your presentation on the younger folks and crime. We may have some of those people too, not the audience, but
The question is more to do with worker safety and maybe even take a step beyond that. What are you doing specifically to deal with employees' mental health in a post-COVID environment? Anybody want to attack that?
The one thing that we've kind of doubled down on is our EAP, or our Employee Assistance Program. I'm sure you guys all have those, you can get them through your, but it's funny how there's almost a stigma to it, which is really strange to me. So I started telling people how I used our EAP program, because I'm too stupid to figure out our healthcare program. And it made people feel better, and I got my executives to use the EAP program and talk about how they're using the EAP program, and we just got to get through this stigma of calling somebody for help is a bad thing, and I don't know. I think that's the channel. I think you guys probably all have EAP programs. The question is how many people use them, and if they're not using them, I think you gotta really just be willing to talk about them and get your leaders to talk about them and use them yourself. And then people won't have maybe the stigma that goes along with talking about mental health issues. Because once again, you can't deal with that in your work environment because you have HIPAA and all the other challenges, right? But people do need help, and we as manufacturing leaders have to provide that help and make sure people are taking advantage of it.
Yeah, I have nothing of significant to say because we're very weak on this, but I just wrote some ideas down from Tom, so thank you.
And I think the big thing from what Tom said was the stigma. It seems mental health was a growing trend pre-pandemic. The pandemic only accelerated it in many factors. And as a society, I think we just need to get to the point where I got high cholesterol, so I manage that in some way, shape, or form. Well, if there's a mental health issue, you do the same. You can't ignore it. If you ignore it, it's just going to get worse. It's going to, from a personal standpoint, obviously that's not beneficial, but then from a company standpoint, it impacts bottom line. People are not showing up, employees' retention issues. It's something that needs more of a holistic solution.
Yep. I wouldn't say we do anything special on helping employees with their kind of overall mental health, other than what you all mentioned, but we do work to help employees feel better about work, at least on the work aspect of their lives. And I think, two things come to mind that we do. One is on communication. We, not just me, but everybody, really tries to communicate in an authentic way. I think, especially if you're leading a company, you're so used to doing these, the CEO gets on the town hall and tells everybody kind of this really generic, vanilla, mumbo jumbo, and people don't want that anymore, And I think having authentic communication in different forms, written form, like we do a lot of, memos, where people take 5 minutes and just read everything that we have to say, as opposed to kind of like a little blurb or only video or voice or in-person communication. We try to be authentic and funny. I think that also helps, if you can be authentic in a funny way. And then social media actually has really helped us improve our workplace atmosphere. So we have an employee-only Facebook page, for instance, and people say whatever they want. I mean, I've been called ignorant on that page, really. And then it helped me understand. I was ignorant about it. It was a ventilation issue in one part of our plant, and we hadn't invested in what we needed to do. And the guy was like, he said, "Sachin, don't play like you're ignorant." And I had never been spoken to that way before. And I was like, wow. And then I went and talked to the guy, and I find out that, yep, we're at wrong. And I think that social media has helped us meet employees where they are. And recognizing that's where people are spending a lot of time. So I think just that communication, also embracing conflict, as a lot of times, especially when people were remote, it was easy to avoid conflict, and then people just stew in these issues forever. And we found that was happening a lot. People were taking their work problems home, and just stewing on it, not vocalizing. And so we're really working on having deliberate and healthy conflict as a way to help people feel better, counterintuitively.
From my perspective, we had a young fella commit suicide last December, so really shook the business. It was really unfortunate. Happy-go-lucky, loved being at LMI. His brother works with us, his brother-in-law works with us, and it just kind of came as a shock. So this was front and center for us because it was a bit of a depression, obviously, that went through the whole entire building. So we decided for us, just personally, that EAP wasn't enough. And so what we're doing today is we do lunch and learns on a monthly basis. In 23, we're going to bring them on twice a month. And so essentially it's just people that come in, mental health experts, and the hard part is how to get people to show up, right? Because everyone's strong and tough and they don't need it. And so we really just keep promoting it throughout the business as this is an opportunity to sit in, listen, learn. Doesn't mean that you got anything going on, but it's a chance for you to listen and learn. And then the only other point I would say, and this is one of my sticking points, if I'm hard on some of the management folks, this would be the area, is I want them to show the folks that they can be vulnerable, right? And so we have to lead by example. That means I have to do that. And so we make mistakes, we say dumb things in a meeting, own up, that was dumb. That's not going to get us anywhere. So be vulnerable in front of the folks. You don't need to be the smartest person in the room. You likely aren't. And so get over it and just set a good example. And then our folks will start to see that. They'll start to go, oh my God, I can actually say that I've got 5 kids at home and I'm really struggling with the bills. And so this is something my mom has started. We have a couple personal loans going out right now. And all I ask is that you pay me on time. It doesn't matter how long, just pay me on time, and that's the accountability piece, and it really helps folks get through that. So those are some of the things we're trying to do, but it's a tough one. The mental health thing is a tough one.
It is. Thanks for that. Before I get into the very last question, any questions from the audience? Yeah? Oh, I should bring this.
Back a little bit, more the sales side and maybe the supply side. So I'm just going to assume you're all doing some level of exporting, either direct or indirect exporting. You're probably doing some level of importing. And I'm really curious what you're learning from your foreign customers about some of these same issues. We can shorten it and say, okay, it's a supply chain thing, but I'm really curious what you hear from your foreign markets and what level of priority are you giving to export development this time?
The questions about foreign customers? Export development.
Anybody export?
It's not a major, it's not a big
Sachin, that's accurate.
Yeah, I'll just say real quick, we don't export a whole lot, about 15% of our product, but it mostly goes to Mexico and Canada. I don't know if that counts, but it's kind of part of the same contiguous supply chain. We have tried to, develop external markets. I've said before, we're not the most competitive, and most domestic industry is in that position. But now the strong dollar, which looks like it's going to be that way for several years, is a huge headwind to that. So I'd say it's tough sledding on that front. I can't say we've been successful. Do you have success in that?
Well, we're on kind of the forensic compliance side, not the export development side. Our clients are doing pretty well.
Okay, last comment, because we're 6 minutes over. And somebody mentioned something about a cocktail hour coming up. Okay,
I saw someone bring in a cocktail. That's not fair, by the way.
So, lots of noise in the economy, right? The geopolitical thing is real. It impacts a lot of us. The Fed, they're going to continue to tighten. Interest rates are going to continue to go up. Whether you believe in the big R or little r, how does that change how you will plan for 2023 and 2024? You don't have to raise your hand, you just have to take the mic. Sachin, want to take?
So I guess we're being, like everybody, more conservative on investment, but we're doing it by upping the ante on what it takes to invest. So when we value, so for instance, just yesterday we found out we're not invited into the second round of an acquisition of a company because our valuation wasn't as good. But that was because the discount rate we were using is higher, and we're assuming lower margins, and so it wasn't that we don't have the appetite to invest, it's just that the ante is higher. But really, what, as I mentioned in the beginning part of my comments in the previous one, we're concerned about liquidity, and I think anything that even remotely makes us feel uncertain about our ability to just keep doing what we do on a day-to-day basis, no matter what happens in the economy, we're going to avoid doing that. So I guess that would be becoming more conservative. The last thing I'd say is we're really thinking hard about risk mitigation from an insurance standpoint. Insurance is going to only get more expensive in this recession, with all the climate change and everything that's happening, and putting in place strategies that help us to bring down the cost of insuring risk. Whether it's we opened up a micro captive, so now we're self-insuring on a big part of our P&C portfolio. That's been one strategy, but safety improvements, other things. But this recession, I think, is really going to put risk mitigation in the spotlight for sure.
Sure. So actually, kind of feels like we did 360, right back to where we started. But I don't know if anybody can tell us exactly what our economy is going to look like 6 months from now. But I think for me, you got to look at your balance sheet. You got to look at your customer environment, and then you have to make decisions accordingly, right? I remember going back to the Great Recession when I was at Johnsonville. We basically kept growing through that recession. Now, once again, it was the industry we were in and the environment we were in, and sometimes food can be somewhat recession-proof. So, you got to take it into consideration. But I do very much agree with Sachin. There is more risk, no question about it, and you got to make your decisions in context to a higher risk environment. And if your balance sheet's phenomenal and you're in a position to take risk, I mean, sometimes zig when the other guys are zagging, this is something I learned from Ralph Stayer many years ago. When commodities would get expensive, we would actually get more competitive to build share with Johnsonville back in the early 90s when we were trying to be a company. So, once again, it depends on your situation. There is more risk, but sometimes the ability to zig when everybody else is zagging is a way to lead competitors. And if you're in a position to do that, I don't know this is another great recession. I don't buy it, at least from what I'm seeing, but you just don't know.
Thank you. Any other questions before we wrap it? Fellas, thank you. Appreciate your insight.